Hello, Warriors. Sorry about being a little late. Technical difficulties. Paul didn't want me to get my opinions out to the public before the meeting, but we did it because you know what? You have to be persistent in this business. Okay. You have to live through adversity and you have to be willing to get up off the mat when you get knocked down and be resilient as a trader. So let's get to the markets pre-Fed. We're a few hours away from the king of the financial world giving his decree on rates. And as you can see, like last week, I tried the break, buying the break at par. Never really gave me much. And now it looks like it's really a layup for new lows. I have some targets down here under 98. Just want to make you aware that on the daily, just like down here, we did not confirm. And if we get one more shot down towards 97.60, I don't think it's a time to start getting bullish a dollar, even though there's another wave to the upside here. What's really interesting to me, and I've been talking about this for a while, and on Monday's video, is that the pound is starting to act a little better. We have pretty good divergence here. So, if I was going to fade the dollar after the Fed today, my preferred long between euro and pound would be pound because I think EG is topping out, not for a major move, but at least for some type of correction. We've come a long way, over 400 pips. Why can't we pull back a couple hundred? And that will mean that cable could outperform for a while. You can see the divergence here. What's real interesting and what has really changed is the yen still has not made a new high. So we've had a couple of successive new highs in the Dixie here and now here without the yen participating and leading the way. So you not only have the divergence in the yen lagging what's happening in the dollar, but as I said Monday, it's also lagging what's happened in yields. So what should be a tailwind for the yen, a strong dollar and stronger yields, isn't even generating, and let me say yet, a move to clean out the stops over 145. So this is what I'm going to be focusing on into the Fed. Should we get this rally to clean out stops above 145, I'm going to let it do its thing and say it goes 45.30, 45.40, and then reverses and we start trading back under 145. That's my signal with a 100 pip stop. So that's the way I'm looking at the yen. And may not even happen today. It may take a couple days for the algos to clean up the stops over 145. Looking at Canada, there's too much relative strength here, but when I look at that, see that's your daily. You have the 4 hour also not confirming, but above 70. So if I was going to go with a commodity currency, and I'm saying I wouldn't do it here yet, but as you can see, compared to the Canada, which is above 70, Aussie still well above 30. So I'm looking at between 66.06 and 534 to start stepping up to the plate in the Aussie dollar because it has a better RSI structure. The daily still is diverging. The 2 hour still is diverging. So, anywhere between another 40 and 100 pips, I'm going to start scaling into the long side of Aussie. Going to use the Fed for that purpose if the dollar does continue to rally. I know some people are talking about 112. All I could say is even with the dollar making new highs on certain time frames, it is diverging. There's a 2. Here's the daily, pretty glaring divergence. And one other thing I want to show here in the euro so that you kind of can look at it through your telescope instead of how many pips can I get today, is should we make a new low in the euro? We've been diverging since May of this year. Okay, this was the last confirmed low Then we had another low here under 30. Okay, but a divergence on the euro. And then we had this set of lows, the outside week I called after the inside week. So I probed it, it worked. You know, if you don't learn how to change your mind, you won't have any change left. Tried it again last week, it didn't pay me. And if you follow my videos, I don't take big positions into red days. I mean, this is completely binary. So I'm thinking about what am I going to do afterwards? How am I going to react? So you look at the RSI here, we make a new low, and that's not going to take much. Recent low has been, this low is 98.46, 98.64. So, you know, we're only 30 pips away. Maybe we take out the big round number at 98, and, you know, I'm going to be looking to be a buyer in the euro too. Covering gold right here. Very interesting in gold. You know, if you look at this and you're a technical trader, you go, wow, you know, we had this major breakdown. I mean, this was a major breakdown, right? Go all the way back, 1680. And so far it's respecting the breakdown, right? It's saying, you know, here was a retest and it sold off, and the market's saying, well, you missed the breakdown. So, you know what? I kind of like you. I'll give you another couple of chances a day later. Oh, you didn't take that trade? You know what? I'll give you a little bit more time here, and I'll let you short it at the breakdown again. Just because, you know, I'm going to let people in before we go to 1630. And I'm not saying that it can't happen, but I'm saying I'm becoming more skeptical about it. And then if you didn't do it here and catch that break, you know, they've all been good for scalps anyway. 20 bucks, 20 bucks. And you know what? If you missed all of these entries for the last, I don't know, 5 trading days or so after a major breakdown, I'll let you do it right before the Fed. Okay? I'm going to let you get short right at the breakdown. So what I could say is it could work and we could break down and make new lows. I have 1630 as the next possibility if that happens. But you have to be aware that if we start closing back over 1678, that this whole breakdown is going to turn into a false breakdown. So silver acting much better, you know, the gold silver ratio, I'm much more bullish. Silver, I called the top of the gold silver ratio here a couple weeks ago. It's been a tremendous move to the downside. Could pop, but it's not over. Once we take out 83, we're headed towards 73. And here's my Nostra Pinkert call. And wherever this break ends in gold here, 1550, wherever it is, a lot of Ellioticians have a $2,400–2,500 target. That was Goldman's target when we were above 2000. But when you think about that target, and then you take into consideration the gold silver ratio, which I think can trade back to its mean the way it used to, right around the 40 level. So 40 on the gold silver ratio and $2,500 gold is going to give you $60 silver. So we'll see. Is there going to be another drive, third drive to a bottom? I'm saying that so far it looks like a lot of consolidation. This 1850 level could be a good level to try it. This was halfway back here. But you could also time your silver purchase that if gold does break down towards 1630, when gold's at 1630, buy the silver. And it could be at 1845. To me, this looks like consolidation, and the lows are in. Talked about this falling wedge, when it was happening, before it was happening, before we got the breakout. And if you believe in technical analysis, wedges can retrace 100% of the move. I have it anchored up here at 2086. So, you know, that's still the potential for this move, like the way silver has been acting. Our guest last week, David Morgan, said the white stuff goes first. So although gold broke down, platinum hasn't broken down. Platinum could pull back, but again, the white stuff, and that would include uranium. So silver looking good. Gold, be aware of the breakdown. And if we fail from here, I have some levels around 1635, 1.27 is 1646. And with gold going to 1630, I still don't think silver is going to make a new low, that this will just be part of the correction. And 1850 is a pretty important level should we pull back there. Taking a look at the S&Ps, talked about negative time frame happening in the S&Ps from a week ago until early October. But when I look shorter term, some of my intelligence gathering came up with that we're going to see lows come in around 3780. So if we get a sell-off after the Fed, as you can tell, we're starting to diverge. We had a little bit of a stop hunt here yesterday that tactically at 3870 could be worth a shot and see what kind of rally we get. Again, we're talking about the yields pushing and pushing, but I like TLT. I think that the bonds are trying to bottom here. We've had a 3 drive to a bottom. I know some people are talking 100, 103. We'll see, especially if this low holds that we had yesterday after cleaning out all the stops. But I'm more of a buyer in bonds and think that we are close or making lows. So like TLT, like it or not. WTI may have bottomed here at 82. We'll see if it can hold it. I wouldn't be getting short the crude oil market here. We're getting all kinds of divergences here. Maybe we get one more shot down, but I think there'll be a chance to sell this stuff back over 100. So I've been saying for a while, Putin is escalating. And I've brought up in interviews from what I've learned from people that actually have met him, and an interview by Kissinger, and then some interview by some other guys that knew him back in the earlier days, that his doctrine of he escalates to de-escalate. Well, he's in the escalation position now, and we'll see what happens there. So I don't want to be short crude. And if anything, I'd be looking for a long entry. And I think that's about all I'm going to cover in front of the Fed. The main thing being, let's see if the yen can accomplish a stop hunt over 145. Let's see how extreme the euro gets. If you're short, I think you have to cover. You're going to diverge here. And under the big round numbers is going to be interesting to me. And Aussie getting closer and closer to where I want to start scaling into the long side. And if S&Ps peel off 90 hands in the next 24, 48, 72 hours, that's a level I think that could be achieved. 3780, write it down. I will be commenting. Join us here in TradeGATEHub.com. During the Fed, Mike and I'll be sharing some ideas in there and maybe some actionable stuff. So invite you to come into TradeGATEHub.com. Our sponsor is TradeView Markets, and good hunting. After the Fed, I think that if you're trying to position, guessing what the reaction is, it's pretty binary. It's a roulette bet. But I have given you some ideas if the Fed has that effect on the markets, that there are some ideas to execute on. So we'll see what happens here in the yen and the euro, see what happens down there around that 97.5 level. And silver, I think this is embryonic, and to me this looks corrective. We could have something like this from here and take it down while there's some dollar strength, but I don't think we're going to see these lows again down here at 1750, which was really just a stop hunt. And here's your weekly. If it does flush one more time under this low, it's not going to confirm, but I'm going with this looks like the bottom, and you buy breaks. and silver is the preferred long because of this. Good hunting, everybody. I'll see you tomorrow. I have an interview with Pavel Hala of spreadcharts.com. You'll find the guy very fascinating. He's made some great forecasts since I've been interviewing him. And most of all, don't just count your pips, count your blessings, everyone. I'll see you tomorrow. Stay tuned for Mike.